Hi everyone, Ed from Wise Up here again. We've got a couple of sessions on taxation. I've decided to sort of divide it down into two bits. This first one's going to be about general taxation, but if it's more about income tax that you've got a particular interest, then I've done a separate one for income tax. So search that one out on the website as well. But for today, it's general taxation. Now, most people think probably the house is the sort of biggest expenditure they're going to have throughout their lives. It's actually not. The chances are it's actually going to be tax that you're going to be paying most out of. Generally, it's about £1,000,000 for every person in Britain. That's going to be what you're going to end up paying throughout your lifetime. So a huge chunk of money. So I think it's probably worthwhile just having a little look at where it goes, why it's there, and what's done with it. So we're going to start with a little bit of a quiz, something a little bit light. Don't know how good you are at anagrams, but this first session is all about solving anagrams. So here we go. I'm going to give you a few seconds on each just to try and work these out. So there's our anagram on there. 3 words. Obviously, we've got 7, 5, and 3 letters in our 3 words. Give you a couple more seconds. Right, the answer to that is capital gains tax. Now, that's one that you probably aren't that familiar with, I wouldn't have thought. But capital gains tax is basically a tax on anything that we buy with a sole intention of making a profit. And that could be shares, it could be a house if we're actually buying it for the sole purpose of making a profit, so not to live in but just to invest in. And to give you an idea, I mean, you probably watched something called Homes Under the Hammer, or you've probably seen it in the past, whereby somebody might buy a flat for £100,000, they spend £20,000 renovating it, and then they sell it off for £180,000, making what they claim is a profit of 60 grand. Well, that's not actually true. Because there is capital gains tax which has to be paid on that profit. Now, the good news is that you get £12,000 a year allowance for your capital gains, but after that, you will pay anything between 10 and 28% of your profit on capital gains. Now, that differs. If it's property that you're actually making your gain on, it's anywhere between 18 and 28%, depending on whether you're a lower tax or a higher tax rate payer. Or if it's something on shares or something like that, which doesn't have property involved, then it will be between 10% and 20%. 10% for the low rate taxpayer, 20% for the higher rate taxpayer. So when Dion Dublin does his bit on Homes Under the Hammer and tells you how much money they've made, you need to adjust that somewhat. They don't actually tell you about that. Right, here's the second one, slightly shorter. So we've got 6 letters followed by 3 letters. I've already given you a clue on this one a little bit earlier on. This one is actually income tax. Now, all I'm going to say about income tax on this particular video is how old do you think you have to be to start paying income tax? And the normal answers I get is anywhere between 16 and 21. But the actual answer is you could be any age. Provided you're earning enough money, then you will have to pay income tax. So age doesn't come into that equation at all. So for more information on income tax, go and have a look at our income tax session, which is elsewhere on the website. Third one. 2 words, 5 letters and 4 letters. And the answer to this one is stamp duty. Absolutely nothing to do with stamps. Well, not the stamps that you put on a letter and post anyway. It all came from when transfer deeds on documents had to be stamped with a seal. So there was wax put on the bottom of the document and then a seal was put over the top of that, and that was the stamp, and you had to pay a fee for that. That's where the name originated from. Now, we're in the middle of COVID at the moment, and stamp duty has now been frozen, which means there's a chunk of money that house buyers do not have to pay. But once we get out of COVID and we go back to normal, then stamp duty is payable on property above £125,000. And that varies anywhere between 2 and 12% of the band. So if you're buying a house worth £700,000, there will be a certain amount of that which you will pay at 2%, a certain amount at 3%, and so on and so on. Now, at the moment, there is a £300,000 limit for first-time buyers. So if you're buying a second house, you have to pay stamp duty on stuff above £125,000. But if it's your first house, then you don't have to pay stamp duty if the house is valued up to £300,000. But you do have to pay stamp duty above that. But like I say, because we're in the throes of COVID at the moment, that has been frozen for all house purchases in a bid to try and get the housing market moving again. But that's not going to last forever. So that's number 3, that's stamp duty. Now, next one's slightly more difficult, I think. There we are, we've got 3, 6, 9, 11 and 3. 11 letters and 3 letters. I think you're getting the idea of it. It's, the last word there is tax. I'll give you that for a freebie. What do you reckon that first one is? Well, this one is inheritance tax. Now, it's a bit of the odd one out, because inheritance tax isn't paid by a person, it's actually paid by the estate of the person that's died. Now, there is inheritance tax payable on estate values above £325,000. So provided that less than that has been left in wills, then there is no inheritance tax to pay. If part of that estate is for property, then the value that the property can be worth before inheritance tax goes up to £475,000. But over and above those levels, it's 40%. So it's a bit of a swinging tax. It's quite a high one. 40% of the value of the estate above £325,000 if there's no property involved, or £475,000 if there is property involved. Next one, nice and easy. Single 3 letters. It's actually a shortening of the real title. I'm not going to spend too much time on this. I think you'll get this straight away. Of course, it's VAT, value added tax. Now, the current value of VAT pre-COVID and no doubt post-COVID is 20%. Now, that VAT has been adjusted for some things during COVID, but the general rate is 20%. And you've probably been paying that since you've been buying things, because it's put onto the things that we buy. Or I say put onto the things, put onto most of the things that we buy. You don't pay VAT on food from supermarkets. However, if you go to a restaurant, you will pay VAT. And that's the reason why when you go to Starbucks and you're asked, do you want to eat here or take away? There's 2 different prices. One actually includes VAT, and that's when you eat on the premises, because it then becomes a restaurant. And there's no VAT if you take it away. The general sort of price difference there, a lot of people think that is because you're paying for people's wages or you're paying for the space that you're sitting in. It's nothing to do with that. It is solely to do with VAT. There's some other things you won't pay VAT on, things like children's clothes. The odd grey area there is, though, that nobody actually says when a child's clothes is a child's clothes. If you're a particularly small adult, you might be able to get away with wearing children's clothes. You won't pay VAT. Nobody's going to check your ID. Conversely, if you're a particularly large teenager and teenage clothes don't fit you anymore and you have to buy adult clothes, then sadly you will have to pay VAT. So generally, worthwhile having a look around. Toiletries you won't pay VAT on. So there are plenty of things on there. Have a look on the website and you'll get a list of the things that you don't pay VAT on. Next one. 2 words. 4 and 4. 4 and 4. And the answer to this is fuel duty. Now, fuel duty is quite a chunk of what we pay at the pumps. The normal price of a litre of unleaded fuel is around about £1.20 at the moment. Part of that is VAT. Excuse me. Part of that is VAT, and part of that is fuel duty. If we took the VAT off, we'd come down to about £1 per litre. Now, of that pound, 58 pence is actually fuel duty collected by the government, which takes the real price down to about 42 pence. Now, if we start to take off people's profits for delivering the fuel and for storing it and for digging it out of the ground and turning the oil into petrol, then the real price probably comes down to about 12p. So we are paying £1.20 for something that really costs about 12p. Now, the interesting thing here, of course, though, is if we think about the way cars are going at the moment, we're all moving electric. There is a move by the government to try and get us to all drive electric cars over the next 10 years or something like that. And at that point, fuel duty will no longer be collected. There will be no fuel being sold in the form of petrol or diesel. So that amount of money that we're collecting, which is around, it's a big chunk, it's about 20 odd billion pounds a year, that will disappear from the coffers. We're going to chat a little bit more about that later on. But it is something to start sort of having a bit of a think about. If your budget went down by 28 billion quid a year, what are you going to do about it? It's quite a problem. Let's move on to the next one. The next one is again 2 words, and we've got 7 and 4. Second one being duty again. So what is that first one? The answer to this one is alcohol duty. Alcohol duty. It's duty paid on alcoholic drinks. Now, if you were to buy a pint of beer in a pub, depending on the strength of the beer, you'll be paying about 55 pence a pint in alcohol duty. The stronger the beer, the more duty you pay. So of your £4, whatever it might be for a pint of beer, about 55 pence of that will be alcohol duty. If you buy wine, then irrespective of the quality of the wine, generally wines run at about 11% by volume of alcohol. So that's the amount that you pay duty on. So forget whether it's a really expensive bottle of wine or a cheap bottle of wine. The duty's the same. It comes out at £2.97 per litre. £2.97 per litre. And if you buy spirits, again, they're about 40% by volume alcohol. That comes out to £11.50 a litre. So if you're managing to buy a very cheap bottle of spirit, the vast majority of that is probably alcohol duty that you'll be paying. Next one is 3 words, and we've got 4, 4 and 7. 4, 4 and 7. Probably one of the more difficult ones, this one, I think. And the answer to this is road fund licence. Road fund licence. Now, as it stands, we pay road fund licence on petrol and diesel cars. We do not pay road fund licence on electric cars. So like our fuel duty earlier on, over the next 10 years, this amount of income, which is about 8 billion quid a year, is going to disappear. So that's going to leave another small hole in the budget. Now, the way it's actually calculated at the moment is that you pay around £145 per year for cars registered after 2017. That's the year after it's bought in the first place. In the first year, you could pay anything up to just over £2,000, depending on the amount of CO2 that particular car pumps out. So the more green it is, the less road fund licence you'll have to pay. If you own a hybrid car, it's £135 a year road fund licence from the year subsequent to being bought. And as I said earlier on, if you've got an electric car, then it's absolutely nothing at all. So it pays us to go green on that particular one. Next one. 2 words this time, and it is 7 and 3. Second one being tax yet again. So what's that first one going to be? Well, the answer to that is council tax. Now, council tax is payable by everybody, not just council tenants. The only group of people that don't have to pay are students. So if you go into student digs, you won't be expected to pay council tax whilst you're there. As soon as you graduate, you will have to pay it, of course. Now, the amount of council tax you pay depends on the type of house you've got, but most importantly, whereabouts that house is. It actually pays for the general amenities that's in your surrounding area. So if you've got more amenities, then you generally pay higher council tax. And by amenities, I talk about things like public parks, lighting in the street, refuse collection, libraries, gyms, all of those sorts of things all become public amenities, and they are paid for out of your council tax. And as I say, that varies with the type of house and also where it's located. And then finally, for this little few anagrams, we've got 2 words. Second one, tax yet again. And the first word is 11 letters long. Quite a difficult one, this one. And like a couple of the others, certainly inheritance tax, it's not payable by an individual. This one is paid for by a corporation, by a company. And it's a tax on profits that company makes, and it currently runs at 19% on its pre-tax profits. So all of those taxes that we've spoken about can be divided into 2 halves. They can either be looked at as being direct or indirect taxes. Now, the way to think about direct and indirect taxes is that direct taxes, you really don't have a choice as to how much you're going to pay, whereas indirect taxes you do, and it will become perhaps a little bit clearer as I go through. Now, income tax, which raises about £185 billion a year for Her Majesty's Revenue and Customs, that you don't really have much of a choice. If you're earning enough money, you have to pay tax. You can't really avoid it. Whereas something like VAT, which raises 145 billion, you do have a certain amount of choice. If you want to pay less VAT, buy cheaper goods or don't buy the goods at all. Then you can avoid paying VAT, or you can certainly minimise your VAT bill. Capital gains tax just raises £8 billion a year. That's a direct tax, no real choice on that. Whereas fuel duty, £30 billion a year, you have a certain amount of choice. You can choose an electric car, then you won't have to pay fuel duty at all. Or you could just drive less, or even drive not at all. Then you can avoid paying fuel duty altogether. Stamp duty you have to pay, not at the moment as we know because of COVID, but when that's over you will have to pay stamp duty depending on the value of your house. That brings in about £15 billion a year. Alcohol duty, which brings in £12.5 billion a year, you can avoid, just don't drink alcohol, quite easy. Inheritance tax, which is just £4 billion a year, I think I said 8 earlier on, it's smaller than that, it's £4 billion a year. No avoidance on that. If the estate is worth a certain amount, then you will have to pay it, or the estate has to pay it. Road fund licence, if you don't want to pay that, you do have a choice, buy an electric car. At the moment there is no road fund licence payable on electric vehicles. Council tax, wherever you live, you're going to have to pay a certain amount. That brings in £34 billion a year. And corporation tax brings in £55 billion a year from companies resident in the UK. Now, all of that money together comes in, as we can see there, in dribs and drabs all the way through, brings us in about £770 billion a year. £770 billion a year. Now, when we think there's about 70 million people in the UK, then we can see that we're looking at about £1,000 per head in taxation that's being brought in currently, just over. So where does that all go? That's the big question. Well, some of it that I mentioned in council taxes are all about local things. So we'll ignore council tax because that's sort of in one hand and goes out in the other. But the rest of it, certainly a large chunk of that goes out to education. A very large chunk goes out to the NHS. and also the police service, fire service as well, so public amenities there. Building and maintaining our road network also goes out to different types of benefits that people may be entitled to. Social services, so looking after our elderly people and also looking after our young and vulnerable kids as well. So that takes up a chunk of money. Then we've got interest on there. Interest was up at about £50 billion a year. That is coming down slightly, so it's down now into its mid-40s. But we have to borrow money. Unfortunately, it's true. We don't raise enough money to pay for the services that we currently offer. We try very hard to make the books balance, but when we can't, we have to go and borrow. And of course, we have to pay interest on that. Miscellaneous, lots and lots of tiny little bits on here. European payments were in there, running castles and the royal family. All lots and lots of bits and pieces in there as well. And then the last thing that I put on there are the armed services. Now, if we look at all of those things together, then we're looking at an outgoing of around just over 800 billion. Now, bear in mind, these figures are a couple of years out of date, so these are the most up-to-date ones that I could find currently in this format. But overall, we do have a small deficit every year, which we have to borrow to carry on paying. Now, if you remember rightly, during this chat, we were chatting about the fact that fuel duty and also road fund licence is going to be disappearing. And now that's about just under £40 billion a year. Now, that's going to leave a problem. If we don't have a budget that balances, we have two choices. We can either earn more or we can spend less. That's true of any budget. Now, the only way we can earn more is by raising taxes. And we have to choose whether to raise direct or indirect taxation. In real terms, that means we either raise income tax or we raise VAT. If we don't want to raise taxes anymore, then we have to cut services. Simple as that. So your food for thought, if you like, once we finish this and to go away and sort of discuss, will be, what would your choice be? Would you put taxes up? And if so, would it be direct taxes through income tax or indirect taxes through VAT? Or would you cut some of the spending that we do? Would it be the NHS? Would it be education? Where would it be? Really, really difficult choice. There's pros and cons to all of them. It will come down to debate and your choice. So what I suggest you do now is have a chat with some of your family, have a chat with some of your friends and see where you stand. I hope you've enjoyed it. As always, please have a little look through the website. If you've come directly here through YouTube, then the website is wiseup.financialeducation.co.uk. You can follow us around on Twitter at wiseupme. And if you want to go direct to that website, just take a photo of that little black and white thing in the middle of in the corner of the box there, and that will take you directly to the website. So I hope you've enjoyed it. I'm Ed Flack, and this has been Wise Up Financial Education. Bye for now.